Okay, let's unpack this. We are diving into a realm where the financial gatekeepers are being completely dismantled.
Because the core problem for anyone who's serious about trading, it's not really about a lack of technical skill. It's much simpler. It's the lack of capital.
If you want to make a real full-time income, you need access to funds that, start at 100,000 and go up to 1 million pretty fast. And getting that access has always been blocked by two things: either decades of saving up or jumping through all these hoops credit checks, high interest loans, putting your own house on the line.
Right. For most people, especially high earners who are kind of tired of their golden handcuffs, that path is it's agonizingly slow, or it's impossibly risky.
So that is our mission today. This deep dive is based on a whole stack of sources detailing a pretty radical system that claims to just bypass that whole structure. They call it prop farming.
It's an approach that's built entirely around algorithmic trading and collective data. Specifically, it uses a robotic platform they call Titan X and an intelligence layer, the Hive Mind AI.
Exactly, to systematically pass the challenges that these proprietary trading firms require.
And this isn't for someone with, $500 to play with. The profile for this, the learner, is someone with capital to allocate, at least $10,000, probably a lot more.
Right. It's for people tired of the frustration of trying to learn this alone, losing money while they learn, and seeing their capital just sit there, not really doing anything life-changing.
The promise here is a total transformation, bypassing years of struggle to become a consistently profitable funded trader, and doing it with a simple data-backed system. It aims to turn something that is incredibly uncertain into a repeatable, almost business-like model.
And crucially, the sources we've seen, they acknowledge the failures of everything else.
Yeah, the late signals from trading groups, the inconsistent strategies, the bots that don't work, and especially the gurus who, are often just lying about their profits. This system claims to solve the consistency problem through automation and data.
Okay, so let's start with the math that makes this whole thing even possible, the foundation. That foundation is something called the asymmetric bet.
It's often called the holy grail of investing. Why? What does that mean in this context, an asymmetric bet?
It means you're risking a small fixed amount of money for the potential to gain access to a very large pool of capital. In this case, your risk is just the evaluation fee.
Okay, but the reward is access to, say, $100,000 of the prop firm's money. And here's the critical detail for you listening. You are not held personally liable if you lose that capital.
That is the game changer. Access to major capital without personal risk, without debt. So let's walk through the model, the 4 phases, because that's key to seeing the advantage.
Right, so phase 1 is your entry ticket. You buy a challenge fee. It's usually somewhere between, say, $100 to $500. That's your entire fixed risk.
Okay, so a pretty small fee to get in the door. What's next?
Phase 2 is the evaluation. The prop firm gives you a demo account and a really strict set of rules, risk limits, profit targets. You have to prove you can follow them. So you're basically showing you're competent without touching their real money yet.
Exactly. And if you pass that test, everything changes. Phase 3.
Phase 3, you get funded. The average user is going for a $100,000 funded account, but there are much bigger ones available. This is the firm giving you their money to trade with.
And phase 4 is the payoff, the whole reason for doing this.
That's right. Phase 4 is profit sharing. You get to keep up to 80% of the profits you make on that funded account as long as you keep following their rules.
So to just hammer that point home for the listener, this is not a loan, no credit checks. If you lose the money, the loss is entirely on the prop firm.
100%. So the trader has this massive upside and a tiny contained downside, which makes you ask, why would the prop firms set up a business model like this? It seems incredibly risky for them.
They profit hugely, and in a couple of ways. First, they monetize the failure rate. They collect all those challenge fees from the failure. The sources cite a shocking 93% of people who fail.
Wow, 93%. And second, they profit share with the 7% who actually succeed. But there's a third, more strategic reason that connects back to that Hive Mind AI we mentioned.
Which is?
They're running a global talent scout. By making the challenge so accessible, they're using it as a massive filtering system to find the handful of truly talented traders.
So they can see what's working.
Exactly. They can see whose moves are profitable, and then they can analyze and even copy those moves internally on their own real money desks. They're outsourcing R&D for strategies.
That's fascinating. So they're capitalizing on failure to find success, which brings us to the core problem. If the money is so good, why does 93% of the industry fail?
The materials really boil it down to two fundamentally human problems. Number one is emotion. Anyone who's traded real money knows this. Fear and greed are the fastest way to break the rules. The second you get tired or angry or scared, you start making mistakes. You do a revenge trade to win back a loss, and it just spirals.
That's it. Human consistency under pressure is basically non-existent. And the second reason is static strategies. The market is always changing. A strategy that worked last month can get completely decimated this month. So your own brain is your biggest enemy, which is where the solution, the Titan X robot, comes in. It's designed to solve that emotional problem.
Yeah, the analogy in the sources is that Titan X is like the Tesla of trading.
Yeah. It's a robot built to do one task, trading flawlessly by taking human emotion completely out of the equation. It doesn't get greedy, it doesn't get tired, and it never gets road rage and makes a revenge trade.
So that handles the emotion part. But a robot is only as good as its instructions. And that's where the second piece, the Hive Mind AI, comes in. That's the intelligence layer that solves the static strategy problem.
How does that work?
It copies the data model from companies like Tesla. Every user's trading activity, wins, losses, passes, fails, it all feeds back into one central database, the Hive Mind. And it's tracking hundreds of thousands of different strategies at the same time.
500,000! That's a staggering number. What is it looking for in all that data?
It's not looking at past performance, which is key. It's constantly identifying which strategies are statistically working best right now for passing these challenges. It's finding the winning algorithm for today's market structure.
So the community itself, even the majority who fail a specific challenge, are actually contributing valuable data. They're helping the whole collective get smarter.
That's the inversion, right? The goal isn't just for one person to win, it's to gather so much data that the collective always has the best possible strategy. Users just download the top strategy from a leaderboard and upload it to their robot. It's a continuous self-improving loop.
Okay, let me stop you there with a critical question. The natural objection is, what happens when tens of thousands of people are using the same winning strategy? Doesn't it stop working?
The sources address this directly with 2 points. First, they argue that performance actually improves with more users because the hive mind gets more data faster. It just reinforces the winning strategy.
And the second point?
The second, and this is crucial, is that prop firm challenges are done on demo accounts, not live market accounts. So the actions of all these users don't actually affect real market prices.
So the performance isn't diluted because they aren't all trading in the real market. The system is optimized for the game, for the challenge rules.
Exactly. So what about the other practical objection? What if you're not a tech wizard or you're that high earner with no time to manage a trading robot every day?
They have a done-for-you option for that. It's called the Virtual Prop Farmer, or VPF team. We're talking about supposedly over 50 experts who handle all the technical work.
All of it? The setup, the daily monitoring, troubleshooting, optimization. The user's commitment drops to about 5 minutes a day, basically just checking reports.
Okay, so we've covered the mechanism. Emotion removed by Titan X, strategy optimized by Hive Mind, and implementation handled by the VPF team. Let's get to the numbers because these claims have to be backed by data.
Let's start with the big comparison. We said the industry average pass rate is a brutal 7%.
7, which is why prop firms make so much money on the fees.
Correct, but the sources claim the Titan X and Hive Mind system achieves a verified pass rate of over 26%.
26%. So you're more than 4 times more likely to succeed. And to put that number in context, that level of performance is near what the top human traders achieve. They cite one example, a trader named Pascal, who has about a 29% success rate. The system is essentially democratizing elite performance.
That is a very powerful claim. Let's slow down and really break down the ROI math that comes from that 26% number.
Okay, this is critical. It turns the whole thing into a math problem. With a 26% success rate, how many attempts on average do you need to pass one challenge?
1 divided by 0.26, so just under 4 attempts. Let's say 4.
Exactly. 4 attempts. So if the average challenge fee is $500, your average cost to secure one 100,000 funded account is $2,000.
Right. 4 tries at $500 each. That's your total calculated expense. That's your capital outlay. Now, what's the expected value, the potential profit of that $100,000 asset you just acquired?
Okay. Based on analyzing thousands of their user accounts, the average 100,000 funded account generates about $4,800 in profit for the trader.
Hold on, let me just repeat that. A $2,000 capital outlay to access an expected profit of $4,800. That's where they get the claim of a 140% ROI, often in just a couple of months.
And this starts to explain that initial capital requirement you mentioned earlier, the $10,000 to $25,000.
Precisely. That figure has to cover 2 things. The upfront cost of the system itself, which is between $6,000 and $12,000, plus the capital you need to continuously buy those challenge fees.
That makes sense. So the goal isn't just to win once, it's about prop farming, accumulating assets.
It's a complete mindset shift. You don't stop at one funded account. The goal is volume, to rinse and repeat the math and build a whole portfolio of funded accounts. You go from $100,000 to $500,000 up to that $1 million plus funded club.
Which they claim nearly 100 members have already reached.
That's the claim. But there's still a 74% failure rate on any given attempt. You're still losing that $500 most of the time. How is that downside protected? Let's talk about this hedge bot thing.
Right. This is their risk mitigation, what they call the insurance. It's a mechanism called the Hedge bot designed to reduce the capital risk from a failed challenge.
Wait, how does a bot recover a fee you paid to a third-party company? Where does that money come from?
The sources are a little vague on the exact technicals, but they claim the function is what matters. The Hedge bot is designed to recover up to 75% of the challenge fee when you fail.
So if I spend $500 on a challenge and lose, my actual net loss is only $125.
That's the idea. It dramatically cuts the downside risk and protects your capital so you can afford to keep buying more attempts. It keeps you in the farming process.
So they've mitigated the emotional risk and most of the capital risk. What about the objection to the system's price? $6,000 to $12,000 is a lot of money.
They frame it as buying a shortcut. They claim it costs $2 million to develop and that the user is buying back years of struggle and avoiding all the money they'd lose trying to do it manually. Plus, they offer financing.
Okay, let's put a face to this. Let's use that anecdote about Josh, the former Walmart employee who used the VPF team.
Josh is the perfect case study. For him, the first 3 months were all about capital allocation, just buying challenges, building his base of funded accounts. No profits yet?
No profits. By month 4, he started to see his first profit-sharing payments. And by month 10, he had cleared over $100,000 in net profit. The story really stresses that you have to treat the start like a business, deploying capital, not harvesting profits. It requires patience.
And they back this all up with a guarantee, right?
They do. A money-back guarantee. If you followed the system and they can't help you get funded, they claim they will refund 100% of your investment. They say they're taking on all the performance risk.
So, what does this all mean for someone looking to generate serious cash flow? Let's compare this to the traditional ways.
Right. The traditional paths just require massive amounts of capital. The sources give clear numbers. To get $5,000 a month in cash flow from real estate, you probably need to control $1 million property. That's maybe a $200,000 down payment, a huge barrier.
And for the S&P 500?
Assuming a generous 10% annual return, to get $60,000 a year or $5,000 a month, you need $600,000 invested. These are numbers most people will never see.
And the claim with prop farming is that you can start generating that same $5,000 monthly cash flow with just $10,000 to $25,000 in allocated capital for the system and the challenges. It's presented as a rapid financial leverage vehicle.
And it's still not for everyone. The sources say there's an application process to make sure the user is a good fit, that they have the right risk tolerance.
Which is interesting. Even a math game needs the right player.
So let's bring this all together.
Well, the sources claim this Titan X system basically democratizes the success rate of the top 0.001% of traders. And if the biggest barrier to elite financial success is just human emotion and the inability to adapt, well, that raises a really important question.
Yeah, when technology successfully removes the human element from these performance-based models, does it fundamentally shift the entire competitive landscape? Does it stop being about skill and talent and become purely about capital allocation and mathematical repeatability?
That's the real nature of this new asymmetric bet.